The Bank of Canada interest rate announcement for December 7th. We are getting started today with a pre-rate show. What I'll do here is I'm just setting up one of my streams here. And as we are going through this, I would love to hear what you guys think about what's happening with the rates today and what's going to be happening with the rates from the Bank of Canada. Are they going up today? Are they going to remain the same? Are they going to go down today? I don't really think that they will go down. However, it will be interesting to see if they go up, how far they go up. And as a mortgage broker working across Canada, I'm looking forward today to doing this with you guys and to sending you all a update as to what's happening. So we're just going to pause this here and I'll be right back with you guys in a moment. In the meantime, my name is 𝗪𝗚, and we'll be right back to start our show here in just a moment. All right, I'll put a 1-minute timer on. All right, so we're back here today. Again, we're doing the interest rate announcement. And it's been quite a year. It's been a year full of rates heading up on the Bank of Canada's announcements leading up to today. We saw a supersized rate hike in the summer this year of 2022, where we did move into a fall with another large rate hike in September. And then we had another rate hike on October the 28th, a 0.5% rate hike on October 28th, 2022. So we're looking at a prime rate right now of 5.95, which is one of the highest rates that I've seen in my whole entire career, which has been 12 years. So it'll be interesting to see what happens today with the interest rate. We have our announcement coming out in approximately 15 minutes right now. As we look into that announcement, I did want to take a look here on our pre-rate show as to what the news is saying, what's happening with the Canadian interest rate today, and what our news outlets reporting on the Bank of Canada interest rate announcement. And it looks like that banks' news articles are saying that there's a few things actually here that looks like CBC is saying that central bankers have to make hard decisions. Looks like CTV News is saying that there's an inverted yield curve right now that we are working with that adds to the dilemma. This will be the 7th interest rate hike of the year if this does go forward as a rate hike. So it'll be interesting to see how that works out. As far as rate hikes, I know that rate hikes, there's been 8 scheduled meetings for 2022, and this will be the 7th rate hike out of those 8 meetings. So it's almost as if every single meeting we've had this year, we've had a rate hike. Looks like Global News is also saying we're expecting a rate hike as well. All right. Financial Post reporting higher interest rates are needed to tame inflation. So looks like there's a sentiment going on about there is a rate hike expected today, and we should expect to see rates possibly going higher into the future to tame inflation. So what's the bond yield been up to today? As you all know, guys, I follow the bond yield to make sure that we are able to monitor the fixed rates in Canada. And fixed rates in Canada are largely determined by the bond yield. So taking a look at that today, it's been interesting to note because the bond yield did go down. We are under 3% today. I'm going to try to share my screen here. How can I do this? Okay, share my screen here with all of you so you can see what I'm talking about with the bond yield and how it has gone down in the most recent few months. All right, so here we are. We'll just set it up like this. All right. So we're at 2.95% today. We had a peak here close to the rate hike announcement in October, where the bond yield did peak at 3.85%. So we're almost down a whole percentage point from the October highs. And with fixed rates following closely to the 5-year bond yield, I've actually had a few lenders as of this morning lower their fixed rates on lending. So that's been quite an interesting observation, to say the least. All right. We'll just do this here. Again, today we're looking at the Bank of Canada interest rate announcement. This will be the 8th meeting the Bank of Canada is having in 2022 today. Should expect to see an announcement coming up in about 10 minutes' time. In the meantime, we are looking at the bond yield today to see how it is affecting fixed rates. As I'm showing here, since October 20th, when the bond yield did peak at 3.8%, it has gone down almost a full percentage point, sitting right now at 2.943%. And I did see lenders lower their fixed rates as of this morning. So it'll be interesting to note what does happen with the Bank of Canada interest rate announcement today, as this bond yield has been falling. And a lot of the professionals and experts in this space have been saying that lower interest rates are to come based on this trend. So as you see, it has gone down. We did experience a low point in August of 2.605%. So we'll see how far this bond yield does go. All right, so I'll stop sharing that screen in a second here. But one other thing I like to follow is the CDOR rate. And the CDOR rate has been climbing actually, which has been reducing the spread between prime and the CDOR rate. And usually what I like to see is a good spread there, because it does show that there is a good deal to get on variable rate mortgages at the time when the spread is high. especially when it's over 2%. However, right now, it is not a high spread, and we're not looking at anything more. Let's look at the CDOR rate here. I'll bring that up for you guys. We can take a look at that together. All right, where would that be here? CDOR rate. And I'll just bring that up. All right, so just sharing that screen here. Okay. So we can see here the CDOR rate has been climbing steadily since January of 2022 as the prime rate has been rising. Currently, CDOR rate does sit just under 5%. And with the prime rate of being 5.95%, there's a low spread now between the CDOR and the prime. So when you're looking at mortgages, it's good to speak to a mortgage professional to get a good idea of whether or not variable is the right type of mortgage for you, as the spread has been decreasing going into the new year here. We did have a high point here right before the rate announcement in October. As you see, it's been slowly going up comparison to the earlier part of the year where it was going up quite considerably. This is the CDOR rate. All right, so turn that off there. So what our article's been saying, they have been saying that inflation is over. Well, inflation is not over. As we know, inflation did come in at 6.9% for the most recent month. That is on par with the prior month, which was also 6.9%. So inflation is far from over, and the Bank of Canada is looking at bringing inflation down to 2%. Now, is that reasonable? Have they gone too far with interest rates? Is it reasonable to continue to raise interest rates into the future, considering that inflation really hasn't been decreasing that quickly at all? Also, variable rate mortgages have still been fairly popular, although much less popular than they were at the start of this year and last year. Almost seemed like a third to about a half of my clients and other clients that I knew from other brokers were taking variable rate mortgages. And that was simply because they wanted to afford more home, afford more house. And getting a variable rate mortgage, you're able to get a higher mortgage, believe it or not, because the rate is lower versus the fixed rate. However, right now, we're looking at people taking fixed rates, and the popular fixed rate that I'm seeing is the 2 and 3 year fixed rate, because what a lot of folks are thinking is that they will get the fixed rate for now, which is a little higher, but they don't want to lock in for the full 5 years at that high rate. Folks want to get a fixed rate just for a few years so they weather the storm and then go back into a variable once rates go back down. Now, I was at the Mortgage Summit, the 2022 Mortgage Summit, where we had lenders and we had top brokers. We had the top mortgage specialists from the banks there as well. They all seem to think as well that rates will go down perhaps mid-2023 to late 2023, and that will spur some heightened real estate activity towards the end of 2023. All right. What have clients been saying? what have my clients been saying about mortgages? Well, it seems like all my clients at this point are believing that rates are going to continue to go up, that everyone understands that it is a increasing rate environment that we are in right now, and that rate increases have become fairly normal. A lot of my clients also have been calling because they've been hitting their trigger rate, and their trigger rate has been hit simply because they took a static payment variable rate mortgage where the payment stays the same as the interest rate does climb. And with that, when the payment stays the same as interest rate rises, those folks have an increasing amortization. So those folks with the static payment have been seeing their amortizations increase from 30 years to 35 years to 40 years to 45 years to 50 years to 50 plus years. Some of them have actually hit their trigger point, and that happens when the total payment that is fixed is now going to interest only, simply because the rates have gone up so much that the entire payment is consumed by an interest cost. And any further rate increases past that trigger point will cause the client to hit the trigger rate, which means that they will get a higher rate on their mortgage, and a higher interest than what is already payable through the payment, which means that interest can start accumulating on the mortgage balance again. So essentially going backwards on the mortgage balance and adding principal back onto the loan, because each payment, because it is fixed, is not enough to pay off the interest cost for that month. All right, so we have the Bank of Canada interest rate announcement in just a moment here. Let's see if they have released their decision. I'm checking their Twitter. Let's see what we have here. Coming soon, our monetary policy decision. All right. So nothing shared yet. We will see this very shortly here. I'm very excited to see what the Bank of Canada is going to release. All right. December the 7th. Okay. We have a interest rate announcement, everyone. And I have it right here. I'm going to read it to you guys here in just a second here. And I'm afraid a lot of news outlets did get their predictions wrong. There was a lot of predictions saying a 1/4 point increase, a lot of predictions saying a 1/2 point increase, but more so, we were looking at a 1/4 point increase. But here we are. We are seeing that the Bank of Canada increases policy rate by 50 basis points. Wow, that is a large rate announcement. Let me bring that up on my screen here. We will just take a look at this right now. Let's take a look at that. 50 basis point increase here. Make sure you guys can see it all. We have an increase here, increasing target overnight rate to 4.25%, with the bank rate at 4.5%, deposit rate at 4.25%, essentially increased by 50 basis points. So what does that mean to prime rate? Well, prime rate right now is 5.95%, and that will bring our prime rate now to 6.45%. Another large increase today by the Bank of Canada. They say they are continuing quantitative tightening. And let's see what their comments are around this. All right, inflation around the world remains high. So that is true. We are seeing inflation coming in at 6.9% last month. 6.9% the month prior, over 7% prior to that. Global economic growth is slowing, although it is proving more resilient than was expected at the time in October. So, okay, more resilient global economic growth than we thought back in October. That is an interesting statement. In the United States, the economy is weakening, and the Bank of Canada states consumption continues to be solid and the labor market remains overheated. So that is an interesting comment as well. So people are not really, I don't know if this is news that is old at this point. Bank of Canada is saying that people are not losing their jobs. I'm seeing a lot of articles coming out where there are quite a bit of layoffs happening at this time. The gradual easing of global supply bottlenecks continues, though further progress could be disrupted by geopolitical events. And as we all know, there are geopolitical events happening all over the world right now. And with this increase in interest rates by 50 basis points, I think the Bank of Canada is adding some cushion to the, it's interesting to see what they're saying here. GDP growth is stronger than expected in the third quarter. The economy continued to operate at excess demand. Why is everyone buying everything? Well, in an inflating economy, it seems that people do want to buy cars, appliances, and everything that seems to be going up in price before it goes up further, which causes excess demand. So inflation is happening and we are still buying things, and that's not going to help reduce inflation anytime soon. Canada's labor market remains tight with unemployment near historic lows. Well, I guess if you're looking for a job today, you're in a good position, since if you're looking for work, the Canadian economy is doing really well with unemployment at near historic lows. I'm not sure what you guys think about that. Have you found yourselves being able to find a job without any issue? I know a lot of the business owners that I deal with, and a lot of the self-employed folks that I deal with have been noticing a slowdown. So it seems almost as if this is information that has not really hit the Bank of Canada yet. All right, talking about inflation, 6.9% in October. We did go over that. Measures of core inflation remain around 5%, and 3-month rates of change in core inflation have come down, an early indicator that price pressures may be losing momentum. However, inflation is still too high in the short term, and the short-term inflation expectations remain unelevated. The longer that consumers and businesses expect inflation to be above target, the greater the risk that elevated inflation becomes entrenched. Okay, so what does this mean now that the Bank of Canada has raised their rate by 0.5%? What does that mean for the Canadian customer? What does that mean? Let's see here. Bank of Canada raises rate 50 basis points. Let me put that in here. Okay. So what does that mean for our customers and mortgage holders today? Well, because the rates have gone up now 50 basis points, this is quite a big increase yet again. We've seen a 50-point increase in October, and we saw a 75 basis point increase in September. We also saw a 100 basis point increase in the summer. We also saw other rate increases leading up to the summer increase. So this has been a slew of rate increases by the Bank of Canada to bring inflation down and to curb demand. There is still high demand in the marketplace, and people aren't really losing their jobs, and the Bank of Canada really sees the Canadian economy as doing fairly well, considering all of that. And it's really interesting to see the Bank of Canada raise rates in a time when the 5-year bond yield has been falling. As I mentioned earlier, right before we did this announcement today, I did see that there are a few lenders that right prior to this rate announcement decreased their fixed rates right before the Bank of Canada raised their Bank of Canada rate, which is for variable rates. So that brings me into, how does this affect the typical Canadian homeowner? Well, when rates change, those with variable rate mortgages, home equity lines of credit, adjustable rate mortgages, car loans with a variable rate, unsecured lines of credit as well, and variable rate credit cards, all of those folks will be affected. So in this case, because the rate did go up by 50 basis points, we will see payments on adjustable rate mortgages go up. Everyone with a mortgage with a variable payment will receive a letter from their financial institution accordingly with the old payment amount and the new payment amount. Everyone with a adjustable rate mortgage will see their payment go up. Those with a variable rate mortgage that have a static payment will see their payments stay the same. In this case, those folks will see their amortization increase even further. As I said, some of those folks have their amortization increasing from 30 years to 40 years to 50 years. Some are now at the infinity years because the interest has gone up so high that we are seeing no principal pay down, and the interest is actually higher than the monthly payment, which means that banks are now adding balance back to the principal, as not enough payment is available to cover the interest costs for that mortgage payment. So those with unsecured lines of credit and home equity lines of credit, your minimum payment now on your monthly payments to your home equity lines of credit and unsecured lines of credit will go up as well. That's unfortunate news for anyone with a line of credit that does borrowing off that, either for business purposes or for personal purposes. Those payments are going up today. Variable rate car loans will be affected as well. Usually with car loans, the payment is static, and it's just the length of the car loan will be affected at this point. But you do want to check with your car loan provider. Also, variable rate credit cards will be affected. So you'll see the minimum payment on your credit card change accordingly, either go up or go down accordingly. All right. So what do you think is going to happen on the next rate announcement? Let me go over what the rate with you guys when the next rate announcement is by the Bank of Canada. See when the next one will be. Upcoming events. The next interest rate announcement will occur on January the 25th, 2023. We will see also the Bank of Canada release a monetary policy report at that time. That date is 8 weeks away. So not quite 2 months, but enough time. That is pretty much 2 months from now. 8 weeks away, we'll see the Bank of Canada meet again to discuss the interest rate at that point. As mentioned, we were expecting a 0.25 to a 0.50 rate increase Today we saw a rate increase of 0.50%. The 0.50 rate increase is larger, on the larger side of things, versus going with a 0.25 rate increase. So it's interesting to see that they took this stance on today's rate. Okay. So there are a few folks coming in on the chat talking about where they are at with their interest rates. There's a few people hitting their trigger rate. There are three things that you can do when you've hit your trigger rate, and the bank will usually reach out to you with those options to give you an idea of what you're looking at, what to expect, and you have a few different options. At that point, when you do hit your trigger rate, if you are on a fixed payment variable rate mortgage, you're able to either, number one, increase your payment enough that you're past that point again and you have a new trigger point. So that's number one thing you can do when you hit your trigger rate. You want to contact your mortgage professional, mortgage specialist, or mortgage broker, whoever you dealt with when you set up your fixed payment variable rate mortgage, to go through those options. You can also make a lump sum payment to catch up on your mortgage to avoid the trigger point. And that's number two. So either raise your payment or do a lump sum. Number three, actually, the bank would love for you to do, and that is to lock into a fixed rate. And by locking into a fixed rate now, you're going to be protecting yourself from that trigger point going forward. And those are usually the three options. Now, what do my clients usually do in this case? They usually end up just raising their payment, because people don't have the ability really to do a lump sum payment. And between raising their payment, you can either raise your payment and stay on the variable, or raise your payment by locking into a fixed. Most people will lock into a fixed because they don't want to worry about it anymore. However, as I mentioned, we are expecting rates to come back down in late 2023 based on what I have heard at the 2022 Canadian Mortgage Summit, which was held in the GTA. And the Mortgage Summit was held with mortgage professionals from lenders, other mortgage specialists that work directly for the banks, as well as other mortgage brokers. And they were all saying that rates are to come back down in late 2023. Anyhow, in the meantime, thanks for your question. Appreciate that with the trigger rate. It's if you're that high already, a lot of my clients are trying to hold off as well on raising their payment if they can with the lenders. If you're not able to do any of those three options, a few lenders are allowing you to just put that extra interest that is payable back onto the mortgage and add it back to the mortgage balance. That may be the best solution for some clients, and that is a solution that you need to work out with your lender directly. I know that a lot of lenders have been doing that, and I've seen that happen now quite often. It's also been reported in the news that they are adding funds back to the mortgage principal to be able to allow people to continue with their current mortgage payment and not face any financial hardship. I hope that helps. Okay, so the next Bank of Canada interest rate announcement is on January. What was I saying here? January 25th, 2023. I look forward to meeting you all there for the next Bank of Canada pre-rate show. Thanks for watching Canadian Mortgage Weekly Live. This is Canada's only weekly video mortgage news podcast with your host, 𝗀𝗡. Thanks for watching today. Today is December the 7th, 2022, the 8th meeting by the Bank of Canada and the 7th rate increase in 2022. This year has been full of rate increases that have been very large, supersized, and have really affected the bottom line of each Canadian homeowner's pockets, especially if you're in a variable rate mortgage product. If you have any questions, or if you want to go over your options on the different options you have as a homeowner and a mortgage holder, please book an appointment with me through the link below or send me a message. I would love to meet with you to discuss your home ownership plans and your goals, to be able to just go over what options there are available to you today. And we'll see you next time. Thanks for watching, and join me tomorrow for a regularly scheduled episode of Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, with your host, Joe Bladek. And we'll talk